Jones, 63, began his career at E.F. Hutton as a commodities trader in the cotton pits in 1976 before transitioning to macro trading and founding his hedge fund, Tudor Investment Corp. in 1980. "I remember, because I started out in '76 trading commodities," Jones said. "For 120 years all commodity futures had limits, and I remember so many times in the late '70s, early '80s, where the cotton market would be limit up or the soybean market would be limit up because that was the allowable amount that prices could move. And they would not let them go anymore because they knew the irrationality of human nature and the possibility of what a mob can do to anything, so they had limits. Then financial futures came along. Finally, the market broke. One thing Jones has learned over the last 40 years is that it's the same story over and over again. It's the same old story so often, just with different characters, different times, different plots," he said. "So that looked a lot like 1929 to me, and I knew for a fact that if and when it broke, because of the derivative structure, that the downside was going to be unlimited, literally unlimited, because there were no limits on futures. The most recent example was this past February when the market entered correction territory and traders got hosed on short volatility products. That was just a bomb ready to explode. That was just a matter of time. And that entire break in the first week of February was all derivative inspired. And if I think of some of the greatest financial crises of the last 30 years, they, generally speaking, are derivative inspired because that's where all the leverage is." A year after his 1987 bet, he founded Robinhood, a nonprofit dedicated to combating poverty in the New York City area. Over the last 30 years, Robinhood has given away more than $3 billion. Watch the full discussion here. Julia LaRoche is a finance reporter at Newspulse Finance. Follow her on Twitter. Email tips to LaRoche at